Welcome to another Stage Analysis video. It's Sunday the 15th of October 2023. I'm going to start off the weekend video with a look at a few of the mega caps reporting earnings this week, as we've got earnings season is kicking up a notch this week. Started last week with some of the major banks, etc., but starting to get a few more names come in this week before it ramps up even more in the following few weeks. So we've got Tesla and Netflix reporting on Wednesday the 18th after the market close. So I'm going to start off with that before getting into the regular member content. So looking at Tesla's current position on the weekly chart here, this is a standard stage analysis chart, 2 years, 9 months. Sometimes you can obviously look at a little bit more, but generally gives you enough information to see the cycles as it's gone through the various stages. So at the moment, we're still just moving into the normal part of stage 2. We moved into early stage 2 back here at the late part of May, early part of June, had the backup and rebounded back out again. So at the moment, it's been tightening up over the last few months or so as the market's corrected. You can see we've got this triangle / apex type pattern forming with the volatility contracting in here. So again, it's set up for obviously a break in either direction, depending on how these earnings results are received. Obviously, being in early part of stage 2 still, we'd be looking for a stage 2 continuation breakout ideally. So we'd be looking for obviously a gap and go type move back above this near-term pivot here, so which is around the 279 level at the moment. So you can see relative strength versus the S&P 500 here. This is what we call the Mansfield zero line, which is the 52-week moving average of the stock divided by the S&P 500. So you can see it's been outperforming since June, since it started moving out into stage 2 here. So still in a strong position compared to a lot of the market. As you'll note, if you've been following the recent posts, we've got the vast majority of the market is actually in a weaker position at the moment. We've got more than 2/3 of the groups in the stage 4 zone, and obviously a small amount in the neutral zone, but the smallest amount in stage 2. So from the bell curve, which we'll cover a little bit later, there's still more than 8 times as many groups in stage 4 compared to stage 2 at the moment. So although that's improved a little bit from 12 the previous week times, it's still quite a lot. We're still 8 times as many groups in stage 4 compared to stage 2. So a very weak market overall. So mega caps like Tesla here are going to be very, very important to see if the market actually holds up or whether it busts wide open. So we go to the daily chart. You can see that volatility contraction that's been happening over the last 3 months here since the previous earnings, I believe, back in July here with the gap down. So you can see the pattern that it's formed, very tight. Now sitting right above the 50-day moving average here currently, and just below the 21-day moving average, but basically is in a sideways range here, which you can see from the free ATR counter bands here. So looking for a break in the near term. As I said, the ultimate move there back above the 279 area, but in the near term, if you can get back above the 1 ATR level and the closest pivot around 270, then obviously that would be good for a potential stage 2 continuation type attempt. Look at Netflix. On the other hand, this is actually starting to roll over into stage 3. So now some people might say this is already in stage 4, but a key part of stage analysis with the stages is that the 30-week moving average here, we use the simple moving average for this, needs to be declining for it to be in stage 4. So although it's below the moving average, and if we go to the daily chart, although it's below the 200-day moving average and the pivot that formed below the 200-day moving average, which can be a good proxy for the stage 4 breakdown level at times. But when we're still got a rising 30-week moving average, it can't yet be in stage 4. So although it's broken down here, this would still be considered in stage 3. So we're looking for some kind of rebound attempt here back in. It started to move out into stage 2 a while back in the later part of 2022. You can see this gap up move here in October wasn't the move to stage 2, as the opposite is true at the other end. So we still had a declining 30-week moving average at this point where it broke out through here, gapped up in October there. So until the moving average started to turn back up again, this point through here, it wasn't yet in stage 2, but obviously it was in the position to move into stage 2. So you can see the gap down bar here. This was our significant bar, and this obviously trapped the price for a long time. So when you have significant bars like this, obviously it's very hard for it to move out into stage 2 in a short amount of time. So we go to the daily on this one, you can see the moves in this as it's moved back below the 50-day moving average. Had a significant bar on the daily here back in early part of September. It's ground down lower. It's what we consider a short-term downtrend below the minus 180 R level here. The majority of the price action has been below that now for the last month, and it's now dropped below its 200-day moving average here, the 50-day and the 21-day moving average. And the relative strength versus the S&P 500 just broken below the Mansfield RS0 line here, so it is in a reasonably weak position in stage 3 at the moment, but as I said, not yet stage 4. So be looking to see how this reacts to earnings, whether it busts apart into stage 4 or whether it can recover back above the near-term pivots through here. So get back through the 400 level, back above that 50-day moving average, obviously could be of interest for a potential stage 2 continuation. But at the moment, obviously starting to roll over with a lot of the rest of the market. So obviously there's been significant weakness for the last few months now as the broader market has corrected. So Netflix and Tesla both reporting on Wednesday after the close, so they will be key for what goes on in the market this week, in my opinion. Okay, let's move on to the major market indexes, starting with the S&P 500. Had a good rally early in the week into Wednesday, obviously pulled back later in the week. The percentage of stocks above their 50-day, 200-day and 150-day moving averages combined chart here. This is a custom one I do for the Stage Analysis members. You can see how this has been on the decline since the late part of July here. So topped out at just over 60% in July and has been rolling all the way down. We're down at 28% at the moment. So that's short, medium and long-term moving averages combined, and that covers the NYSE and the Nasdaq Composite. So basically it's around 5,000 or so stocks compared to the S&P 500, so 10 times the size of what we see with the S&P 500 here. So while this has remained very strong, obviously in early stage 3 at the moment, with following the stage 2 move, but an ABC correction, obviously just starting to move into early stage 3 here. But this has been significantly weaker for the broad market. And you'll note when we do the industry group relative strength rankings later, I'll show you some of the weaker end of the market, and you'll be able to see there's been some significant stage 4 declines at the other end of the market. So if we go to the daily chart on this, see the rally low in the short term. We did get a strong reversal move, cancelling type follow through day on the 6th there, and then had a 4% or so rally off the lows back above the 21-day moving average, and the pullback so far has been under 2%. So it's pulled back only less than half of the 4-day rally there. So constructive so far, very neutral position for the S&P 500, just sitting below the 21-day EMA, so your 1 month moving average, and between the 50-day and 200-day moving averages here. So very, very neutral position. And if you look across the chart here, you can see the June pivot low, you can see the low in August. Obviously this was also tested in September on the upside and downside there. So this has been a key level multiple times through here. So the price action is sitting just around in that zone at the moment. So a very, very neutral level, and obviously a major area of support and resistance. So it'll be key which way it breaks compared to this level here. Percentage of stocks above their 20-day moving average in the S&P 500 sitting at 35% at the moment. So we broke out from the lower zone here. I talked about this on the previous videos. With this, we ideally want to see a quick breadth thrust straight from the lower zone to the upper zone to show some, obviously, a sign of strength. We have had a pullback, so obviously indicating there is some weakness in there. It's not got that breadth thrust going on through here, but could still make it back to the top if it can follow through from here. As I said, we're in a very neutral position here, in between the plus 180R and the minus 180R levels. So until it breaks either way, still in a neutral position. Nasdaq 100, on the other hand, again, squatted on the week, But we have got earnings coming up this week. So last week's price action, not completely overly important in terms of this week's action is going to be significantly more important with more stocks starting to report. So a bit of a holding pattern until obviously a lot of the stocks start reporting, I would imagine, at the moment. So percentage of stocks above their 200-day moving average in the NASDAQ 100 is at 61%. So still borderline on the strong area. So above 60% is strong. 60 to 40% is neutral, and below 40% is the weaker end of the market. So you can see during the stage when it was below 40% for the majority of 2022 there, obviously while it was in a strong stage 4 decline and starting to move into early stage 1. So at the moment, as we've moved out into stage 2 through here for the majority of this period, it's been above that 60% level. So if it does start breaking down in here, then that would be obviously a cause for concern. Looking on the daily time frame, you can see the percentage of stocks above their 20-day is up at 46% at the moment. It's pulled back from the upper zone. Did have that thrust low from the lower zone to the upper zone, but didn't get all the way and hold in there. It's come all the way back into the midpoint. So as long as it can hold up in this mid-range and doesn't drop all the way back down to the lower end, then this could still recover. We could still be moving up and out from this recent spring and test. So at the moment, we've got a little bit of a double bottom pattern going on in here. It's still in a very neutral position at the 21-day moving average and the 50-day moving average in there. So looking for a break above Thursday's pivot, which would take it back above the plus 180R level, obviously back into a short-term uptrend if that was the case. But if it does roll over here at the 50-day moving average and can't get back above that, then obviously a 200-day moving average test would definitely be on the cards at that